Good morning and happy Friday. Jordan Keck here, your complicated deal guy, with your weekly market update. Kicking off interest rates down a little bit from 6.66% last week to 6.60% this week. Most of that gain coming from improvements yesterday after the US canceled airstrikes against Iran. We'll get into that in a moment, but first, going over our weekly mortgage tip here. This week, we had Freddie Mac come out with news changing guidelines about how a gift of equity can be used to pay off personal debts. So, gift of equity can be done whenever there is a relationship between a buyer and a seller. So, typically, if you're going to be buying or selling to a family member, you can gift a portion of your equity to go towards not only closing costs, but also towards down payment. Now, Freddie Mac is saying that on conventional loans with Freddie Mac, that additional amount of gift of equity can be used to pay down personal debts at closing. This is the same way that VA allows for seller credit to be used to pay off personal debts at closing and can help qualify. Now Freddie Mac doing that with gift of equity. So if you're in a situation where you or a client, somebody you know is going to be doing this, Freddie Mac now has that option, can pay off debt at closing to qualify, and can make that a really nice piece there. Next, again, Trump canceled airstrikes against Iran and said that a deal was agreed on, just waiting for signatures. Now, markets rallied on the news, apparently just waiting for the time and place of signing to be announced shortly. Unlike previous announcements, we didn't see much pushback on these claims by foreign media sources, meaning that they may finally be ready for the news we've been hoping for. And then Iran today came out and basically echoed that sentiment. So we may actually be on the verge of some kind of a peace deal with US and Iran. Next, we got CPI, Consumer Price Index inflation for the month of May, which is up 0.5% in line with estimates. Year over year, the headline number rose from 3.8 to 4.2%, mostly due to oil, which rose 7% last month alone and is up 41% year over year. The core rate rose 0.2%, above estimates of 0.1%, and the core year over years rose from 2.8 to 2.9%. PPI wholesale inflation, though, on the other hand, rose 1.1%, quite a bit above estimates of 0.7%, and even though there was a 0.3% downward revision to April. And most of all of the rise, of course, has been due to oil, and oil rose 23% last month alone on the wholesale side. So since we saw a 7% increase in oil on the consumer side, but a 23% increase on the wholesale side, means that wholesalers have either eaten the cost of that and not passed it along to consumers, just because it has to go somewhere, right? And so 23% increase at the pump would be pretty rough. Year over year, the PPI wholesale inflation rose from 5.7 to 6.5%, just 0.1% higher than estimates. The core rate rose 0.4%, which is below estimates of 0.5%, and there's still a 0.3% downward revision to April. Next, we got existing home sales for the month of May, which rose 3.2% to an annualized pace of 4.17 million units above estimates. There was also a positive revision to April of 0.5%, so sales are now up 3.2% year over year. Existing inventory rose 3.3% to 1.55 million units, which equates to about a 4.5-month supply nationally of inventory. The NAR and Realtor Confidence Index showed that homes are on the market for 29 days, down from 32 days in April, meaning moving a little bit faster. And then of the total buyer pool, 35% of all sales for the month were first-time homebuyers, which is up from 30% last year and the highest level since June of 2020. As always, hopefully this is helpful. Have a fantastic weekend. Stay cool out there, and we'll see you next time. Take care.